Greetings, Dr. Jeffrey Scott here. This is my Market MRI Pro update for June 10th, 2025. Really two themes, waiting on inflation data. We got the CPI and PPI on deck. Um, a surprise to the upside from tariffs, probably not good for the market. A lot of pundits saying that we won't see the tariff impact for another quarter. We will see. And then mitigating that might be some positive news coming that there has a deal, or at least a framework for a deal has been reached with the China tariff talk. So we may have um, dueling factors tomorrow as to what the markets actually do. Again, my name is Jeffrey Scott, Market MRI Pro at gmail.com, Google Group Top Down Trader. Once again, I want to thank everybody who participated in our seminar, both live and online this weekend. I love teaching and I love being in front of the room. I kind of get high doing that and it drives me. It was worth my diversion home in the 24 hours to come travel 5 hours because of the weather. But it really was, I thought, a great event from my perspective. Now, apparently it was true from your perspective as well, based upon the feedback that's been coming out. So again, thank you, thank you, thank you. I paid attention to the feedback, and I softly announced it yesterday, so let me live it more loud. If you own Market MRI Pro, if you own CAT Scanner on Wealth Charts, if you own the app on TradeStation, I'm going to officially launch a users group. I will have 2 user group meetings per month, probably starting maybe before the end of the month, but probably in July. Um, and the one meeting will be for beginners to go through all the different windows in the program, show you how to customize it. And the second will be more of a power update of how I use it to find great stocks. So if you haven't bought it yet, reach out to me at marketmripro@gmail.com if you want some more information. Either way, join my Top Down Trader group because that's how all these things will be driven from. All right. As always, everything I do from education to webinars, even my tools, should be considered educational tools only. And it's to help you to learn, understand top-down investing from my perspective, which I've learned from many people over the past couple of decades, and really Ian Woodward is probably the most important one. How I use the different tools in the market to apply them. Trading involves risk. You are solely responsible for any decisions you make. I may own or intend to buy or sell any stock mentioned in this report. And trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. And as it's obvious from my intro, I have tools in multiple platforms, um, different programmers on each tool. And frankly, I like supporting the programmers that have helped me. And that's kind of why I talk about the tools. Google Group is called Top Down Trader. There's no cost. As an advantage of it, those people that purchased the Market MRI Pro at my meeting got an extra $100 off just for being a member of a free, non-threatening group. So it's it's been a good thing for me because it's the only way I keep any kind of a mailing list. And if you have any interest in what I do, consider joining the Google Group. Like I said, it's free. As I said, CPI is up next. We have it starting at 8:30. This could be a really interesting number. 0.2% is prediction, 2.5 year over year. A hot number will not be good. I don't think there's any other way of saying that. Jobless claims on Thursday and PPI coming in on Thursday as well. And then we end on Friday with consumer sentiment, which sometimes isn't a big market mover, but if it comes in to the low side, that's not good either. So lots of pressure left on the rest of the week. We got earnings, we got Chewy, and we've got the big ones, Oracle, on Wednesday. And GitLab was selling off after hours, even though it had beat the numbers or Affirm, which was just the market we're in. Obviously, didn't meet some of the whisper numbers. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Let's go take a look at the charts. I always start here. It gives me a great view of what happened across a really broad market. Upper left are the ETFs that I like to track on a regular basis. You can see Bitcoin was up 0.84, Q's 0.66, Spiders 0.57, and the Russell 0.54. I'd say they all were about the same. The diamonds lagged, but was still up 0.29. Dollar was up 0.11, and volatility was down again. If you look at the middle 1, 2, 3, 4, you can get a sense of where things fell, and Russell actually gave up some of their gains. It was only about the middle of its range. New high, new lows continue to be positive at 12 months. New highs minus new lows when you look at the NYSE and the NASDAQ. This is a powerful pain. If you got the program, pay attention to it. It tells you the internals real time during the day. Blue is yesterday, blue is current day, gray is yesterday, green is current day, gray is yesterday. It shows you the percentage of sectors, industry groups, and actually percentage of stocks advancing. So we were better on breadth from a sector and industry group. 69% of stocks advancing, 57 and 60 in the NYSE. So definitely more than half of the market was up, which means it's a bullish day. When we look at one-day change, and we only see one sector is negative, and that's industrials. And boy, they've been leading. You can see here over 50 days up 10%, second only to technology. But a one-day rotation out, financial, staples, utilities. Underneath, after that, these are all some of the more defensive. Tech was in the middle, 0.56. The leaders were energy again, communications, and discretionary. So right away, it gives me a sense of the market. Broad-based rally, market's up nice, not massively, but nice, and the breadth being supportive. Down here, it gives me a sense of what was working. Home construction, that means somebody thinks rates are going down tomorrow. Semiconductors, solar, oil, gas exploration, electronic and autonomous vehicles, renewable energy, biotech, clean tech, transports, genomics, kind of a growth on sort of picture. I then go to my timing brief, which is quick because I just look at this line here. Spider weekly is a buy, Q is a buy, Russell's a buy, diamonds are a buy, and the daily's been a buy for quite some time, as you can see by the length and number of bars when we flip to the daily charts, which takes a moment to load all the data. So we've caught much of this rally up with our buy-sell signals. And now that both the weekly and the daily are showing me buy signals, it's hard not to be long. Now, there's an asterisk there, and at some point we're going to be at risk of a top, and I think we might be getting close there. And I'm going to show you a couple of things that have caught my attention as I think about the degree of my money I am putting to work. I trade my own money in what most people consider a sizable account, but my biggest account I still have professionals doing it because I have a job. I work full time. I have over 3,000 employees, and I can't let that interfere with my big nest egg. But I'm still very active trading my own, and we talked about some of my performance this weekend. It's been a good year. You could see here, again, that's just my comment overall, and there's no guarantee that use of any software, any educator, reading a book, listening to somebody's blog is going to help you make money. It's just to help you get educated, and I think that gives you a better chance. Here is the all-time high on the spiders. We are certainly poised, I think, to get there on the daily chart. This is the 17, the 200, and the 50. This is a trend line off the bottom, sort of showing you the V-shaped recovery. Now the issue is, will we get up to that level before we fail? Will we break above it? Will we have a double, triple, quadruple? You know, you get into this area down here, and you start looking at 1, 2, 3, 4, 5, 6, 7 times that we failed at that level. And this is a false breakout. So I think this is an important point, and you know, we're 1% away. So I think those people that are saying we're near a top, they have a point, although it doesn't say we can't blow on through, especially if the economic data is favorable and we get something going with China. That is the spider, and you can see I already talked about the performance, so I'm not repeating everything. But if you're looking at this, I put an indicator here. It's a very simple indicator. In fact, we have a not a new feature, but the ability to adjust any window. Let's see if this is the right one. And you could see here this thing called percent, and that is under price. And if you put that on, it shows you the change from yet close to close, percentage wise. So you could see on today we were, as we know, up 0.57 or so on the spider. So if we go and we want to look next at the Qs, are the Qs going to show me the same thing? Let's take a look. So the Qs all-time high, there we go. The all-time high of the Qs is probably sitting right up here. I mean, what do you think the likelihood is that, yeah, I guess this is the wrong one. Let's try this one. Yeah, I guess I have to get the drawing turned on in the screen. The Qs are, if all-time high is 540 and we closed at 530, that's 6 points away, 1.2%. So we are going to threaten, now will we have a single, double, and a triple top and a failure? I think you got to work like that's an opportunity or a possibility, and you got to be prepared for it. Hopefully blow right through. What about the diamonds? Does the story change? Well, if we look at the diamonds, we've got to get all the way up here. So that's a little bit further, 450. We're at 430. So that's a 5% move. So the diamonds don't have that right above them. But we are at a point here, that we failed. So I have to be cognizant of the risk. Although I'm a half full, not a half empty sort of guy, I think the market has the power to go higher. And what I'm really going to be looking at to support that is what is the Russell going to do here at the 200? Here was a trend line that they broke. And so that is a little bullish in itself. But now are we talking about the big one, the 200, one we've been behind for so long? And a break above that 200 is going to get me very, very happy. So I will be watching closely what happens to the Russell. And I think that might be the story of what happens with this rally. If we fail here hard, then I think this rally is suspect. A break above the 200, and I think we'll be looking at all-time highs. If we look at volatility on the day, let's just bring this up and keep up what I'm doing. You can see bouncing around the bottom, down a bit, down 1.22%. And then lastly, the US dollar, which I believe rallied a little bit today. Let's take a look. And you could see, let's get to where I want it to be. Let's just click this. The dollar, not a massive move up 0.11, but reversing some of the downtrend. But let's look at the dollar. We are consolidating after a big sell-off. And I think a weak dollar is one of the things that can certainly help the U.S. markets. Commodities, gold is at that point where they are have recent all-time, well, I guess it's all-time highs looking at that chart, but gold was up a bit, sort of coiling here and can go either way. And silver had almost an inside day, down 0.5%, so not a big day on the precious metals. Oil threatening the 200, traded above it, but couldn't close there, was down 0.63. And then you're going to see natural gas has busted the 200. I hate that when that does that. And then the 10-year, if we look at it, was down 0.22, and the 30-year. And this is a very important area here. I've sort of highlighted the 5% range. And again, I'll be watching that. It seems that every time the 30-year goes above 5%, the market goes in the toilet. So we shall see what happens. And we've got big risk here. If we look at the buckets, clearly we're getting overstuffed in the upper part of the Bollinger Bands, but only 8%, 9%, 11, and 9 are above. So this is a super strong market appearance. That is awesome, but I wouldn't be running off and selling based upon this. Let's get to 30% intraday, and then we'll talk about being overbought enough. Market breadth, you can see the strong day on the NYSE on the left and on the NASDAQ on the right. You could also see stocks above the 50, 20, and 200 are just, especially the 50 and the 20, are getting up to those areas where you expect a reversal in the 80% level. So that's a sign that we've got some pressure coming in. And again, you have bull in the bear. Will that 200 break above, will the Russell break above the 200 and give us some new fuel as the market broadens out and the small caps rally? Or does a failure be a prelude to the markets rolling over at resistance, which would be the old highs, which are very close, especially on the spider and the Qs? As we look down here, we can see volume looks higher on the NYSE, and what I typically use to get a sense is I really like Market Surge. And one of the things that Market Surge does on the front page of Market Surge, even before you open up their charts, which we use some in our meeting, I think it's a great product, and I like looking at some of their outer period of time of earnings. See, NASDAQ volume was up 17%, NYSE volume was up 5%. So on decent volume, that's great. We look at the new high, new lows are positive on both. Advanced declines positive as up-down volume. And guess what? We got another bango today on the NASDAQ. So signs of getting tired and getting too far? Yeah, the bango and starting to look at the breath. But I don't think we're done. I think it all is up to inflation. If we get a surprise to the downside on inflation, if numbers come in as expected or close, you might see the last powerful rally to take us to new highs. On the other hand, if the CPI or PPI come in very hot, I think inflation's a problem, and I think that'll be a problem for the market. Ratio charts give us a sense of what is working, and I just want to point out the strength of discretionary and technology remains strong. Communications is trying as well, and industrials, after leading for some time, has come off. Let's see. All right, let's go over to this layout here, the JAS layout. I really don't want to make this a long, deep stock analysis tonight, so I'm going to cheat. As soon as this is done, I am going to go to my favorite signal, which is the two momentum bars in a row, and think about it. If Ian's kahuna of a percent B change is 0.24, and it demonstrates an unusual, powerful day in the U.S. market for a stock, a market, etc. What do we typically see after a big move by a stock? We typically see the stock retrace. But if you see two positive days in a row, or imagine three momentum, which is a force and kahuna firing in the same direction in the same day, if you were to see that 3 days in a row, you must have a powerful move in the making. Now, we talked yesterday about Flutter as one of my picks, and you can see Flutter had run up to 200. I don't know if it was yesterday or we talked about it at the program over the weekend, but we had our two dots, the gap volume breakout momentum here. And what happened? These stocks pulled back a little bit, retraced, and then as the market picked up, the market moved up higher, and Flutter was up 1.5%. And when you look down here, you see this relative strength at OBV versus their moving averages are both strong. Playing here with an indicator that was introduced to us by one of our great speakers this weekend, which was Matt Caruso, where he talked about looking at short-term extension in the markets. So Flutter looked good yesterday. What's going to be my winner today? Let's look for two-day momentum. Let's look at $5. Let's look at 500. Let's hit OK. And we'll start with ALT, because ALT is doing something you never see. And ALT has given you 3 days in a row coming out of a squeeze. Relative strength and OBV look great. 41% is not overbought by any means, and today broke above the 200. I think this looks very interesting. I got rising lows, rising highs, and today at least we took out the 200-day moving average. ALT, Altimmune, is in healthcare. A couple of others that I liked, Ethereum, the altcoins perhaps not performing as well as Bitcoin, considering it's at or near all-time highs. But look at what we saw with Ethereum. Um, a big move up, sideways consolidation, and a breakout. If this was a stock, I might think, boy, we got a bit of a cup and a handle and a breakout. Relative strength and OBV look okay. I think Ethereum looks interesting here. So many of these look good. Look at something like OLN. Now, OLN has been in a horrible downtrend. Horrible downtrend. But when do you start to look at it again? And we had a discussion at our meeting about do you buy below the 200? And one of my great speakers, John Person, said that he does. And I looked at it and said, I do too, but I'd rather buy something that's above if I can find it. Well, let's look at OLN. From a technical perspective, it makes money, but it doesn't have any earnings growth. From a revenue perspective, it's picked up some and had positive surprises on both earnings and revenue. Okay. It pays a 2.37% dividend. And if I look at the news, Olin is a bargain with improved guidance and new cost savings announced. Well, that's a nice thing. A fair value of $35 a share, that's a 50 to 60% move here. And that was an analyst report May 24th. So are you a value buyer? And if you are, maybe you ought to be looking at OLN. There's your dots. Notice relative strength and OBV are really not there yet. You're definitely not extended. But the rest of these stocks look a lot like OLN. For example, BAX, Baxter. And I'll tell you when you start to see these patterns over and over again, you see them in rotation as the stocks that were lagging. Baxter's a quality healthcare company and a stock that's been beat up. It's had consistent earnings. It pays almost a 4% dividends. It's had earnings surprises. So I will probably look at Altimmune tomorrow. And I may look at Baxter and maybe OLN and Ethereum. These are my favorite signal. They're high value signal. One of the benefits of a program like Market MRI Pro is you can actually look back visually and try and find prior times when that signal has come in, and you can ask yourself, when that signal came in, did the stock go higher? Here's the last time that signal came in. Again, it's the first dot above. So, hope you have an awesome day in the market. I will probably do this again Wednesday and Thursday because I'm home. Take care, everybody.